Let's be honest, the word insurance can make your eyes glaze over, right? But it's also probably the single most important shield you have for your entire financial life. And to really understand why, I want to start with a story.
So picture this guy who seemed to have everything figured out. You know the type. He was doing great in his career, earning a really good salary. He tracked every single rupee, had a solid emergency fund, and was investing like a pro for retirement. On paper, his future looked totally secure.
But then, out of absolutely nowhere, life threw a massive curveball. His mother got seriously ill and had to be hospitalized. The final bill? A staggering 10 lakh rupees. That's a million rupees. It was one of those catastrophic events that you just can't plan for.
And just like that, his carefully built financial world came crashing down. The emergency fund? Gone. He had to sell off his long-term investments, the ones for his future. He even had to take on debt just to cover the rest of the bill. Years and years of hard work and discipline, just erased.
And the tragedy, unfortunately, didn't stop there. Just a few months after all that, he was in an accident and passed away. He left his family, not just with their grief, but with no main source of income, a huge pile of debt, and an unfinished home. Their lives were just thrown into chaos.
So, what on earth went wrong? And more importantly, how can you make sure this never happens to you? Well, that's what we're going to tackle. We'll look at how a perfect plan can be destroyed, what this insurance shield really is, and what tools you need in your toolkit. Then, we'll dive into a super practical buying guide and finish up with the common traps to avoid.
You know, that story isn't just some worst-case scenario. It's a real reminder that life is completely unpredictable. Accidents, illnesses, they don't exactly check your bank balance before they show up. And the financial hit can be absolutely devastating, wiping out a lifetime of work in a heartbeat.
So, what was the one thing, the single thing, that could have protected him and his family from that entire financial nightmare? It wasn't about saving more or finding a better investment. It was insurance.
And this is where we really need to shift our thinking. See, insurance isn't just another bill you pay or some boring investment. It's a shield. It's the foundation that holds up your entire financial plan when life's biggest storms hit.
So what is it really? At its core, insurance is pretty simple. It's a service where you basically transfer your biggest financial risks, like a crazy hospital bill or a major accident, over to an insurance company. And in return for taking on that risk, you pay them a small, manageable fee. That fee, that's your premium.
Now, to really get this stuff, you only need to know 4 key terms. First is the premium. That's the regular fee you pay. Then there's a claim, which is when you ask the company for money because something happened. The cover is the maximum amount of money they'll pay out. And finally, renewal is just paying your premium each year to keep that shield up and active. Simple, right?
A question I hear all the time is, hey, if I've got savings, why do I need insurance? And it's a great question. Think of it like this. Your savings are for the small, annoying stuff. Your salary's a bit late or you need a quick home repair. Insurance? That's for the huge, life-changing disasters that your savings could never, ever cover, like a major surgery.
Okay, so we get the why. Now let's get into the what. There are a bunch of different types of insurance out there, but let's make it easy and think of them as tools in a toolkit, where each one has a very specific job.
We can split these tools into 2 main categories. First up, the must-haves. For pretty much everyone, these are non-negotiable. We're talking health insurance for medical bills, life insurance to protect your family if something happens to you, and motor insurance, which you legally have to have anyway. Then you have the good-to-haves, things like home insurance, critical illness cover, or even insurance for your fancy new phone.
All right, let's get down to brass tacks. We're going to build a super simple, practical guide on how to actually go out and buy the 2 most important types of insurance out there, health and life.
Buying health insurance really doesn't need to be some complicated nightmare. You can break it all down into 3 simple steps. First, pick your policy type. Are you flying solo or do you need a family plan? Second, decide how much cover you need. And third, and this is important, actually take some time to compare different policies and companies to find what's best for you.
So how much cover do you really need? A great rule of thumb is to base it on healthcare costs where you live. I mean, treatment in Mumbai is going to cost way more than in a small town, right? So for big metro cities, you should be looking at a cover of at least 15 to 50 lakh rupees. For tier 2 cities, maybe something in the 10 to 25 lakh range. And for smaller towns, 5 to 15 lakhs is usually a good starting point.
Now, for life insurance, the process is just as simple. Step 1, do you even need it?
And the rule here is crystal clear. If someone, a spouse, kids, parents, depends on your income, the answer is yes, you need it. Step 2 is figuring out how much cover you need. And Step 3 is picking the right kind of policy and for how long.
So how do you calculate that number? The goal is to create a financial safety net for your family, one that replaces your income and clears all your debts. A fantastic starting formula is this. Take your annual income, multiply it by 10, and then add the total of all your loans, like your home loan. That number? That's your target.
Okay, we've covered a ton of ground. The why, the what, and the how. But before we finish up, we absolutely have to talk about the common traps that so many people fall into and the key habits you need to build right now. If you only remember one rule from this whole thing, please let it be this. If a product tries to mix insurance with something else, like investing, just avoid it. Seriously. These combo products are almost always super complex, they're packed with hidden fees, and they end up doing a bad job at both insurance and investing. The smartest move? Keep your insurance pure and your investments separate.
So, let's wrap this all up with a few key do's and don'ts. The biggest mistakes you can make are thinking it won't happen to me, only relying on the basic insurance you get from work, or not being totally honest about your health when you apply. Instead, you want to build these smart habits. Keep all your policy documents in one place, make sure a trusted family member knows where they are, and please set renewal reminders so you never forget to pay.
And that brings us right to the final and honestly the most important question. After all this, I want you to take a second and really ask yourself, if something unexpected happened tomorrow, is my family's financial future truly 100% protected? If that answer isn't a confident yes, then today is the day to start building your shield.